This is James Corbett of CorbettReport.com, welcoming you back to Economics 101. Today, I'm honored to be joined on the line by Patrick Carmack, the producer of the highly influential Money Masters documentary and the author of the Milton Friedman-endorsed Monetary Reform Act to extinguish the national debt in the United States and to end the unjust practice of fractional reserve banking. Mr. Carmack, thank you very much for taking the time to talk with me again today.
It's a pleasure to be with you again. Thank you for having me.
Well, Patrick Carmack, today I'd like to talk about an organization which I think many people may have heard of, but very few people know what it is or what it does, and that's the Bank for International Settlements in Basel, Switzerland. So why don't you tell us about this organization, its history, and the purpose it serves in our current global financial architecture?
Well, the Bank for International Settlements was established by the Hague Agreements in 1930, and it was initially to process the payments by the defeated nations, Germany and Austria and so forth, to the victors, and that was how it got started. It's taken on a new character, much like NATO has. As you know, NATO was originally a defensive alliance, and it's become actually an aggressive alliance with troops now. As you know, in Afghanistan, they don't have anything to do with defending Europe, at least directly. Well, that's similar to the Bank for International Settlements. It's transformed so much, its original purposes have been completely lost. It has 57 member central banks, and those central banks, their object is very, very similar to what happens in the United States and in other countries with systems similar to the United States banking system, which is that the member banks get together in order to coordinate and set policy, particularly monetary policy. And I guess another way to put it, that would be credit policy. And in the United States, as you know, there's 12 members of the Federal Reserve System, member banks, and they're in turn owned by all the banks in each one of their districts. So the Federal Reserve's actually privately owned, as a lot of people know. The stock's all held by banks, privately owned banks. The 57 member central banks in the BIS, Bank for International Settlements, get together to set policy, much like the Federal Reserve Board of Governors does. And so it's essentially replicated on an international scale what the Bank of England initiated in England in 1694, which was a national control over money through a privately owned bank. And what the Federal Reserve subsequently did with the passage of the Federal Reserve Act in 1913. And in 1930, as I mentioned, the BIS was established, but its character is transformed, most particularly in the last 30 years. And those 57 member banks can make various determinations on how they measure various things in their monetary system, like collateral, bank capital, how their collateral and capital is evaluated or valued. And that in turn has an impact in each member bank and in the world at large, because these 57 nations represent basically all the significant nations on Earth that have, a huge impact on global economics. And they, in particular, in 1988 and in 2004, initiated regulations that had significant impact on global economic activity. And the regulations they passed in 1988 is called Basel I. Bank for International Settlements is located in Basel, Switzerland. It is exempt from Swiss law. It's like it's above their government. They can't, that is to say, for instance, Swiss government can't execute search warrants. Their police cannot enter the premises. It's like an extraterritorial entity within Switzerland, which is an interesting fact all by itself. And in that, it replicates the city in London where the Bank of England sits. But in any case, in 1988, they passed Basel I, which established for the first time a global capital adequacy standard, which was 8%. So just in simple terms, they had to have 8% of their loans available in terms of capital in the bank. In 2004, they passed Basel II, and what it did is it didn't change the 8%, but it changed the way it was calculated, and specifically by adopting a mark-to-the-market standard, so that the collateral, collateral can be used as capital. There's various tiers in how they calculate capital, but in any case, it affected how that was valued. It had to be valued based on the current market value, mark to the market. Well, that was fine, and if the market's going up, it means banks can actually increase their loans because their capital's being appreciated in value or inflated. But when it goes down, it has a negative effect, and that's what happened. So when the housing market in the U.S. began to downturn, which was inevitable due to all the subprime loans and so forth, which everybody was aware of, in November of 2007, the Basel II was implemented in the United States. In December 2007, the stock market plunged, and credit began its severe contraction, and that was really the significant beginning of our current economic woes, was a direct effect of the implementation of Basel II. And because as housing values went down, then banks had to increase their capital by decreasing their loans, their capital percentage by decreasing loans, which meant they quit making loans and they called some loans in. They made loans harder to get and so forth. Well, that, of course, further depreciated or hurt the housing market and other economic activity, because if people can't get loans, obviously, or the standards for them are higher, increased, then obviously there's going to be fewer home sales, which further decreased the value of homes and their collateral. So they called in more loans and made, increased the credit standards and so forth. So we can attribute what has happened worldwide to the same group, the Bank for International Settlements, that did it to Japan specifically back in '88, and now it's happened to the whole world. It's very, very difficult to believe that this was all done in ignorance, and certainly wasn't done in ignorance in '88. Anybody that knows anything about banking could predict the effects then, as well as in 2007. The markets did predict it. Things have plunged, and that's where we are. There's a lot more to be said about that, but that's the Bank for International Settlements. That's the kind of power it has. It's global, and it has the same power on the global level now that the Fed has on the national level in the United States.
So, Mr. Carmack, just in the last minute or two we have remaining, talking about the international financial regulatory standards that are being set by this organization, it sounds almost like a global financial architecture is already being set up or has already been set up to some extent. So, to what extent is there transparency with this organization and the decisions that it makes?
It's limited. It's somewhat like the Fed. Parts of it are transparent, and they release press releases and so forth. But as you know, in Australia, they recently had a meeting, and there's no transparency whatsoever. People are trying to figure out what happened there. But so, just like the Fed, if they don't want to tell the public or their governments, they don't do it. And if they wish to tell them, then they tell them, and they tell them when they wish. With few minor exceptions. And there's no external audit authority, just like the U.S. Fed has never been fully audited. So the transparency is for public consumption. It doesn't exist. They tell us exactly what they want the people to know and no more.
Right. So on a note of clarification, what role, if any, would the BIS play in America if your Monetary Reform Act were ever to be passed?
None. It would be the U.S. would withdraw from any participation in the Bank for International Settlements. It's not in any way essential to any national interest to be a member of it, except under the current architecture, as you mentioned. But it didn't exist prior to 1930. It didn't have the roles it has now until about 30 years ago. There's no necessity for it, and it should be collapsed.
All right. Well, Mr. Carmack, a fascinating conversation, but we are out of time. Tell people about your website and how they can access your work.
Sure. We have a lot of information at themoneymasters.com. That's one long word, The Money Masters. And they can read quite a bit about our work and buy the videos if they're interested in that.
Excellent. All right. I'm afraid we are out of time. Mr. Carmack, thank you very much for joining us.
Thank you very much. Appreciate it.